Now we're supposed to be live on the right video. I hope so. I mean, if not, it's the last time I use Restream. Just doesn't make any sense. Should be. Let me check myself on my app. If we are live on the video, we were all waiting. Okay. Let me check myself. Okay, we're live. Great. Anyways, as I was saying in the previous live stream that lasted literally 10 seconds, in this video we're going to talk about SMCI, super microcomputer, finally crashing down almost a 10-bagger in a year or so. Pretty overbought. I actually talked about that company at the start of this year, which, I mean, was already up quite a lot, but valuation-wise, it still made sense because they just reported earnings. Earnings were pretty good, guidance was very strong, and to be honest, even right now, we're going to see a bit later, with regards to free cash flow and their valuation, there are way more expensive companies out there. Now we're going to talk about Coinbase because I know a lot of you asked about Coinbase, look at their earnings report, so we're going to do that. Twilio as well, and then talk about the broader market if you want. We ended the day a bit in the red, shall I say. We ended the week a bit in the red, so yeah, not the greatest way to end the week, but all right. Anyways, I hope you all had a great week. If you've got questions, do let me know down in the comments section below, whether you're on X or on YouTube. I can see normally both of your chats. Let me check if X works. X works as well. Very, very good. Very, very nice. Okay, so yeah, let's start with the Coinbase one. But first, let me show you this. Beep. Voila. So yeah, we ended the day. We could have been green across the board, but then yeah, the last couple of hours weren't that great. If we look at the portfolio, this is not the companies that I own. Some of them I do, but just a portfolio I made here on Seeking Alpha. Link is down in the description if you want to try it out. Of course, affiliate link, so you're supporting me indirectly as well. So yeah, the biggest movers, the trade desk. Maybe I should talk about the trade desk as well, because that's a big position in my portfolio. It's up 17% today. Coinbase up 8.79%. I believe it was up a bit more than that. Hood showing some strength, 4.25%. Celsius still beating myself for not buying this company at $50 and even before. Adian up 1%, now at $16. Remember when I talked about this when it was, what, under 7 euros or something like that? Then Baba, showing some strength today. Maybe there is a revival of the Chinese stocks. Who knows? After all the super investors bought Baba and JD, maybe some smart money is jumping into that. Remains to be seen. And then all the rest, well, all the rest is red. Of course, the 0.17%, all of that, don't really care much, but who took the biggest hits? Roku, we've talked about their earnings reports, down 23.88%. A pretty big, I mean, it's a pretty big hit for what was still a strong report, in my opinion. Yes, ARPU was down, but that's just because of the expansion in international markets, where we know that, well, advertisers are just not paying that much. We've seen that with Meta, with Snap, Pinterest, all of those companies as well. Fiverr down 5.57%. I believe I've seen this price already for the last 6-7 months or so. Block is down 5.53%. I talked about Toast, made my case as to why I believe there's no point in buying Toast when you can buy Square, especially at these prices. Palantir down 3.78%. If we can see $20 again, probably be buying more. Pinterest is down. So yeah, we're down. Basically, all the big names are down right now. Then, if we go and look at, let me zoom in. Boop. If we go and have a look at Coinbase, they obviously had a great report, beat across the board, beat the expectations by quite a lot, which makes sense because we are in a so-called crypto bull market. More volume, more transactions, prices go up, they make money on that. We've seen that play out before, right? We've seen that play out before, and we've seen what happens afterwards when the prices do not go up as fast, when there is not so much volume, profitability goes out the window. So overall, net income, we're back into the profitability area, let's say, $95 million, total revenue $3.1 billion, adjusted EBITDA, fourth consecutive quarter of positive adjusted EBITDA of just under $1 billion, debt reduced by 12% year over year, and they have here $5.7 billion in USD resources. That's up 217 million year over year. Let me sip some. Having a throat infection sucks, especially if you need to make YouTube videos. What did I say? Yeah, so 80+% crypto trading happens outside the United States. Over 100 institutions onboarded to Coinbase International Exchange, etc., blah, blah, blah. Let's look at the numbers already. Okay, so here we are. Would be nice if I can switch myself to the other side here. No, not like this. How can I? Okay, nope. Like that. But my face isn't there anymore. Anyways. Okay. Such a weird software. Anyways, net revenue, as we've seen, reacceleration from Q3, full year, still less than 2022. But if we continue like this, probably 2024 is going to be a good one, especially with regards to profitability. Nothing in 2022. In 2023, $95 million adjusted EBITDA, same story there. If we scroll down and actually look at the rest, so transaction revenue, consumer versus the institutional ones. Institutional ones increased quite a lot in Q4. Same can be said for consumer, and so total transaction revenue followed, still quite far from where we were in 2022, where the company was not even profitable. But I guess more volatility, more transactions, they make money. Stablecoin revenue was a bit stable-ish. Blockchain reward is up quarter over quarter, year over year, as you can see here, full year 2023, 2022. We're up there as well, up hugely with regards to stablecoin revenue. Interest income, not surprising, high interest rates, they take advantage out of that. Custodial fee is actually down year over year. Total subscription and services revenue is up quite a lot. Of course, big jump from stablecoin and interest income. I do want to see this page right here. If you want to follow, it's page number 6. Let me just check. Yeah, page number 6. So trading volume, consumer, institution. Institution actually surprised, way bigger than I thought. So we're here at $125 billion. Consumer just at $29 billion. So again, if you think that crypto is still a small guy type of thing, think again. But yeah, year over year, I mean, basically half of what we were at, a bit less than half of what we were at in 2022. Trading volume, so Bitcoin sits now at 31%, so quite a drop from the Q3 numbers, which was 38%. Ethereum dropped actually quarter over quarter, 15%. USDT at 13%. Other crypto assets, basically all the altcoins, all the shitcoins, back up 42%. If you look at the difference between 2022 and 2023, Bitcoin is up, Ethereum is down, and even the altcoins are down right now. But I believe if we continue this trend, this will probably be up quite big in 2024. By the way, if you own Coinbase, you have questions, If you're looking into Coinbase and you have questions, do let me know. They have been cutting costs, it seems. Total operating expenses since Q2 2022 has come down, but has gone up a little bit here quarter over quarter, not by much though, which we can see here. The increase comes from G&A and other operating expenses as well. As for full-time employees, those got actually reduced a little bit. Of course, year over year, we've seen quite a big reduction. That certainly helps as well with the profitability, especially in the longer term when they get their under control. Compensation was $160 million. I mean, it's a pretty strong quarter for Coinbase. The stocking to be expected. Has it done 4x of a year or so? Pretty impressive. So yeah, don't keep coins on Coinbase. If you've got Bitcoin, whatever, if you're using, yeah, fine, do whatever you want. But usually it's in a cold wallet, cold storage, whatever they call it these days. Much better, especially if you own a lot of Bitcoin. So yeah, that's Coinbase. If we look at Coinbase, which you can also find the link in the description for 20% off this incredible platform. So yeah, Coinbase, it was at $69. Today we're at 180. If we go even at lows, it was $50. So we started over, we peaked at the end of 2023, 117. Then we got that huge run up in the last couple of weeks. I mean, run up with AI and crypto stuff in the last couple of weeks. So the market might be due to a little pullback because some things just don't make any sense. Anyways, this is a company with a $43.62 billion market cap. Nathan here asked thoughts on Roku. I did a video about that, so my thoughts are there. Overall, big overreaction in my opinion, even though the stock did run up quite a lot and is still unprofitable, but the market knew that it was still unprofitable. Yeah, so Coinbase, if we continue, PE, of course, right now there's no E, so there's no real reason to watch that. Currently, if we look at the analyst price target, it's 23% lower than where we're at today. That tells you already quite a lot. If you look at the estimates, and look at the adjusted EPS here, fiscal year 2026 is where they are supposed to be, let's say, at 84 cents. But of course, the huge volatility in crypto, it can be in fiscal year 2025 already. These numbers might change extremely fast. If you look at sales, I mean, with a company like Coinbase, with everything crypto related, it's very, very difficult to have estimates for the coming years, yeah? Because you never know. You never know how long the bull market for crypto will last. You never know if interest will stay that high. You never know when we're going through the bear cycle. So yeah, these numbers can be much higher or much lower. And so it is quite difficult to evaluate this type of companies. I said it a while ago, if you want exposure to crypto, either just hold Bitcoin for some reason, or buy companies like Coinbase, Robinhood. At least it gives you also exposure to something else. Even Block, although still hope they stop with their stupid focus on that. But I don't run the company, so I can't decide. But yeah, Coinbase, as long as crypto goes up and up and up, it will benefit. The moment it stops going up and you see volumes going down, it will not benefit from it anymore. So that's Coinbase. That's Coinbase. That's part number 1 of the video. So that's at 15 minutes. Remember that when I put the timestamps. Then super micro computers. Sorry. So this thing looks like a crypto coin, right? It's like flat, goes up, flat, and then suddenly boom. I mean, year to date, it's up 182%. Over the last year, it's up 736%. But with all of that, I mean, today we're down 20%. Has a market cap of $44.84 billion. With all of that, its forward PE is at 30 times. 30 times. EV to sales, as you can see here, 2.4 times in the next 12 months. I mean, not that crazy, right? If you look at, the, let's do a 5-year mean. Yes, it's true that compared to its 5-year mean, it is extremely expensive, right? Overvalued, but they did not have the growth that they're having right now. How long will that last? I don't know. But currently, I mean, business stock could say it made a little bit of sense. If we compare it to, you can't compare it apples to apples, but let's put AMD in there as well. You'd be surprised to see that AMD is more expensive than super microcomputer. Yes, I know, I was surprised as well. AMD is more expensive on all of these metrics than super microcomputer. Want to look at the other guy, NVIDIA? We can do that as well. If we look at NVIDIA, pretty much the same scenario, although not much more expensive. If you look at forward PE, pretty close. EV to EBITDA, a bit more expensive. Price to sales, way more expensive. Price to free cash flow, same thing there as well. So, I mean, it's been a crazy ride up, but at least right now, with the business growth, it might justify it just a little bit. Might sound crazy saying that, but yeah, if we look at the estimates, right, for fiscal year 24, 25, 26, huge growth ahead for the company. Estimated growth, that is, for sales. Look at EPS, same story there. I mean, let's even look at GAAP. Same story there. If we look at fiscal year 2026, $26.81 on a GAAP basis. So, yeah, it's not crazy. It's not crazy. But the thing is, the moment they stop growing very, very fast, the moment they lose that momentum, they lose the market, lose the momentum or something like that, then the stock will definitely correct. But currently, if you look at what analysts are expecting in the coming quarters, quarter-over-quarter growth still quite strong. Besides here, some 2 quarters where it will be a bit difficult, but the year-over-year comparisons are insane. I mean, over 100% for the next 3 quarters, and then another 40% year-over-year. That's for sales. If you look at net income, it becomes even crazier. So, yeah. I don't know. Share your thoughts. Share your thoughts in the comments. What do you think about super microcomputer at this evaluation? Makes sense? Are you a buyer? Are you staying away? Is it AI hype? Let me know. Let me know. If you want to look at the major overview of what has happened on Friday, this is it. Bitcoin is here at, I don't even know why we have a PE here for Bitcoin, but let's put this. Bitcoin is at close to $52,000 right now. Really good performance. Euro USD, for those who are interested, 1.07. So yeah, I mean, I'll dig a bit deeper with regards to super microcomputer and maybe make a comparison video in the coming days, because it is interesting. Because I mean, when you look at something like ARM, which we have done on this channel already, ARM did not make any sense. I made a video, the stock was at around $118 or so. Of course, the next day it jumped another 20%. Still, didn't make any sense. Year to date, it's up 70%. It's a market cap of $131 billion. PE, the next 12 months, 95.7 times. Yes, it is expected to grow 26 and 29% in fiscal year 25 and 26 year-over-year growth, but still, EV to sales, 35.4 times. It's a company that doesn't even generate $1 billion in revenue every quarter, yet market cap $131 billion. Okay, I don't make the rules. I don't make the rules, but yeah. Let me actually repost on X. Oops. Come say hello to Smci over coin. Poof, beep, bap, pow, bam. So yeah, that's ARM. Up next, we have, well, that's ARM and Supermicro Computer. Up next, we have Twilio. The company also reported earnings a couple of 2 days ago. And since then, as you can see, poof, it dropped around 18-20% or so. Year to date, it's actually down 22%. In the last year, it's down 22% as well. Now, with Twilio, you're buying a company that is worth $10 billion, has a forward P of 22.1 times, EV to sales 1.8 times right now. So yeah, if we compare it to its 5-year mean, it is much cheaper than before. Why is that? Well, before it was just extremely undervalued. Growth was pulled forward because of the pandemic. So that's why you have that little Everest mountain here when you look at EV to EBITDA, price to sales. Right now, the growth rates are, well, nowhere near where we were before. And we are going to have a look at the earnings report in just a second. Let me just show you what the analysts are currently expecting. I believe there's probably going to be some analyst price target updates, because currently what I'm getting here is that the average price target sits at $73, which is 24.8% higher than where we're at today. And if we look at the, I don't know why my stream on X looks like crap. Okay, much better. So if we look at the expectations for the coming quarters, this is not really the growth company that it once was, right? Look at sales growth before, back in 2021, 2022, was growing 40, 50, 60, 20%. Fast forward to now, you're getting year-over-year growth of 10%, 5%, 2.5%, 3%. Not that impressive. If you look at net income, yes, they are now back to a more profitable way, let's say. Net income adjusted, that is, because on a GAAP basis, they're still losing money. When you look at free cash flow, back into the positive area, but still not expected to grow that much, or not expected to grow at all. So there you have it. I know someone asked me Twilio or Roku. To be honest, I think Roku deserves a bit more respect. 80 million, what was it? 80 million active accounts. 80 million active accounts? I think so. You can correct me. Hundreds of billions of hours viewed. They're making their way towards profitability. There is still huge switch going to happen from linear to streaming. Lots of advertising dollars that are going to flow into streaming as well. I call them the gatekeepers of streaming. Every other streaming player has an ad-supported tier. Roku gains from that as well. So, yeah. So that's just my thought. So yeah, this is super microcomputer. By the way, we're now on the daily, not overbought anymore. Still RSI extremely high. On the weekly, yeah, still a long way to go. With regards to Twilio, zoom out a bit, zoom in, should I say? Yeah, 200-day moving average was at $67 or so. Right now, we're sitting at around an area where we rebounded a little bit back in August 2023. Again, do with technical analysis what you want. Sometimes it works, sometimes it doesn't. What do you think about ARM? I think you missed that segment by 6 minutes, 7 minutes. ARM, in my opinion, is extremely expensive, just doesn't make any sense. Great company, valuation-wise doesn't make any sense. Doesn't even generate $1 billion a quarter, yet market cap $130 billion. Okay, thank you very much, but no thanks. Would have been crazy if NVIDIA bought that company, though. Would have given them way too much power, in my opinion. So, Twilio, this is it. This is what you get. Year-over-year revenue growth, 5% for the quarter. Fiscal year 2023, 9%. Get 10% year-over-year growth from organic, and 8% for this quarter. So again, not very attractive or exciting. Dollar-based net expansion rate 102% for Q4, 103% for fiscal year 2023. A small rebound quarter over quarter, which was at 101%, was keep getting lower and lower and lower, as you will see. Where is it? I passed it already. As you will see right here, right? The pure pandemic, a little bit post-pandemic era, we were still at over 120%, and then it just went downhill quite fast. If you look at, here as well, revenue growth year over year went from back Q4 2021, year-over-year growth of 54% to now just 5%. Not that exciting. Total revenue for Q1, the guidance here is expected to be up 2% to 3% and 5 to 6% year over year on a reported and an organic basis, respectively. So, yeah, I've seen more exciting companies in today's market, to be honest. I've seen more exciting companies than that. A question here about PayPal. Your thoughts on PayPal currently? I am a long trade from 57.5. Actually, we have almost the same average price on PayPal. Every biggish move, super strong dollar news, both times taking away all gains for the day. Lol, yeah, lol as well. I have my target for PayPal at 63. I don't have a target for PayPal, but it's worth way more than what it is today, in my opinion, and more than 63 as well, even if it doesn't do that much. If we see some transaction margins becoming a bit better, if we see some reacceleration in growth, top and bottom line, more free cash flow, more buybacks, so I think 63 is still very, 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 very cheap for a company like PayPal that is generating billions of dollars in free cash flow each and every year, profits as well. So we'll see. I share my thoughts on the latest earnings call, earnings report, first look event on the channel. I think the earnings call was a bit, disappointing. Yes and no. Disappointing from the, let me maybe zoom myself in again. It was disappointing because we have been hearing about Alex from the past earnings call. was very, very excited. Then he started tweeting a bit, sounded very excited as well during the holiday season. First look event, shocked the world. Of course, the shock the world sentence was taken out of context, in my opinion, and just people ran with it, myself included. Not gonna lie. Did it shock the world? No, but this wasn't an investor day or investor presentation or whatever. This was purely for merchants. I believe he posted on LinkedIn not so long ago, another meeting with merchants. So yeah, they're really, really focused on their own customers right now. And probably the results will follow in the financials whenever that will happen. I think the results, the earnings call, came 6 months too early to actually look at what has changed with the company. He could have been a bit more excited during the earnings call, but I believe he has set the bar extremely low right now, so he can maybe over-deliver throughout the year. I rather under-promise and then over-deliver than over-promise and under-deliver. So there is that. Yeah, Nathan says, yeah, 63 is my short-term trade target. I have a bigger position and a bigger... Okay, fair enough. By the way, PayPal is not in my core portfolio. It's also a short-term trade that has been dragging on for quite a while. But I think it's going to go and find a spot in the core portfolio because the position has become so big and my conviction in it has become big as well, not because I have a big position in it, which I'm not losing any money on it right now, which is very, very surprising. But yeah, I mean, the upside is just way bigger right now than the downside, in my opinion. And with this type of market where companies have gone up already 100%, 120, 80% year to date, sometimes it makes sense to pick companies like PayPal. And to be honest, if my trade with Robinhood works well in the short term as well, might use that cash to even buy more of PayPal if that doesn't move. Or if you watched my video today about Alphabet, maybe open a position in that as well, because the disrespect of Alphabet is pretty laughable these days. Thank you very much, Nathan. Thank you. If you have got more questions, do let me know in the comments below as well. If the stream on X works well or doesn't work well, please let me know. And on my phone, the stream looks a bit stuck, but I think that's just the servers. Yeah, let me actually look at PayPal just a second. And then let me actually pull up ARM's previous earnings report just to show you what the fuss is all about, or what the fuss is not all about. I love this new keyboard that I have from Razer. Not sponsored, but they can sponsor me any day. Any day. Got a mouse, got the keyboard, got the headset. So Razer, if you're listening, you can sponsor the future streams. So yeah, PayPal. This is PayPal right now. If you think this is normal, then okay, and find me something better. Don't come with Alibaba, because I also think Alibaba valuation-wise very, very cheap. But with PayPal, I don't run the risk of a company or a country bombing another country. Nathan says here, yeah, I've been also eyeing Google for a short-term trade. If it stays at this level, follow you on X as well. Thank you very much. Thank you very much for the follow. Really appreciate that. So yeah, PayPal, 4 PE, 11.5 times. Yes, you might say it's low because the growth rates are extremely low. Okay, fair enough. Fair enough. But for a company that is still this big globally, whether it's active accounts, merchants, you name it. To me, it just doesn't make any sense. It is just too cheap to ignore. I mean, if you look at the analysts right now, even the analysts, which of course you can believe them, you cannot believe them. I've made a post today on X, basically laughing at all of these new price targets for SMCI and NVIDIA. Nothing about those two companies when it was under $400, but now that we're up 100+%, suddenly you've got price targets over $1,000. Okay, cool. Anyways, the current average price target sits at $72, representing 22% upside from the price we're at today. And by the way, this company does not pay a dividend, but if you look at the shareholder yield, sits at 7.35%. 7.35%, basically just all of it coming from buyback yield minus the debt paydown yield. Pretty good, no? Pretty good. I think, I mean, I'm happy with that. If we zoom out, of course, it has done literally nothing. We actually lost money if you bought it 5 years ago. I use Coinbase. I think there is a link in the description if you want to try it out. 20% off. I gained from it. You get to use a great platform as well. So there you have it. So as you can see, or as you can not, here. As you can see, growth rates, of course, single digits, high single digits for the next coming fiscal years. It's okay, it's not a high growth company, fine. But if you look at EPS and GAAP basis, fiscal year 24 down 4%, 4.82% year over year. That's because fiscal year 2023 was such a great year with regards to EPS. But then in fiscal year 2025 and 2026, this company is expected to grow EPS GAAP basis over 10% year over year. So I mean, quite good for me, especially with a forward PE of 11.5. Then looking at the other estimates, more specifically free cash flow, as you can see right here, cash flow operations, but free cash flow more specifically, this is a metric, to be honest, that I would love to see grow a bit more as they become more profitable, as they bring down on cost and maybe do even more layoffs. Because, I mean, of course, it's not nice to say that people need to get laid off, because, I mean, people need jobs, need to take care of their family and stuff like that. But a company like PayPal doesn't need, what is it now, 24,000 employees or something? In my opinion, it doesn't need that many employees, especially not when some of their departments, legal, customer service, stuff like that, can be automated by AI. So yeah, but overall, free cash flow per share, as you can see, over the last couple of years, hasn't really grown that much. Yes, it's more than back in 2018, 2017, but since 2019, okay, 2020 pandemic, flat-ish. It should be increasing. It should be increasing as the company becomes more leaner and continues to grow. Overall, in the last 10 years or so, shares outstanding have come down by 11.63%. So yeah, with PayPal, these are my thoughts right now. I'll try and make another video about PayPal, maybe even their stable coin in the coming days. I'll try and get Roy on if he's not on vacation. Roy, if you're watching, let me know if you want to come on. But yeah, let me go back to ARM a little bit. This is basically ARM right now. Tell me if that makes sense. To me, it does not. To me, it does not make sense. You can say, yeah, but look at their GAAP EPS estimates, the growth rates there for fiscal year 25 and 26. Let's take even 26, right? After huge increases here, $1.26. 100 times. 100 times 2026 EPS you're paying right now, 100 times for that. You're saying, yeah, but maybe after that it grows another 50%, so it becomes 50. No. I mean, if we went from 282% to 51%, then who says we're going to stay at 51%? Maybe it goes back to 25%, maybe even lower, maybe a bit higher. Who knows? So yeah, it's not 50, 75, 50. It's late, I'm sorry. Then I wanted to show you, yeah, basically this. Their latest, it was a couple of weeks, days back. It's true that now they get, I mean now, since 2016, right? Back then you've got general purpose CPU, mobile and others. Right now you've got way more platforms where their chips, their designs, licenses, stuff like that, can go into auto, cloud and networking, IoT, consumer electronics, and mobile, still the largest. Here you got some examples, but still, and still the undefeated champion of the world, still, guidance for a company, again, $136 billion revenue. It's going to be at what? Top line of their guidance, $900 million for a quarter. Fiscal year 2024, $3.2 billion. That's the whole excitement here. It just, to me, it just doesn't make any sense. I mean, yes, there was some slowdown in mobile chips, but we've seen some recovery there across the board, not just by ARM. Other companies saying the same thing. It's okay, fine. But yeah, if there was such a huge surge in demand, right, you would have seen a much bigger jump. We have seen already a jump here in remaining performance obligations, RPO, already from Q1 to Q2. But then Q2 to Q3, nothing really has changed. Actually, license and other revenue is down quarter over quarter. So yeah, same with annualized contract value. Look, again, it's a very important company, very, very strong, great and all, but if there is really such a surge in demand, as we've seen with other companies, right, as we've seen happen with NVIDIA, as we've seen happen with Supermicrocomputer, you can see it in the numbers that suddenly things jump 100%, 50% quarter over quarter. Okay, then you understand that there is real demand. Here, nothing. But not nothing, but when look at this. This is so excited. Total revenue, $824 million, up 14% year over year, highest ever, exclamation point. Really, in the midst of a super AI hype cycle bubble / whatever, this is what we're getting excited about, 14% year over year increase, highest ever. Incroyable. I can also make those numbers. But okay, let's see. We've talked about the ARM v9 penetration, how that is faster than the P8. Okay, we're not talking about engines here, by the way. But still, I don't know what the market is thinking right now. Just fun to watch, I guess. Fun to watch. Nathan agrees, so we're all agreeing here. One thing I would say is the free cash flow. So free cash flow in the trailing 12 months is up 63% year over year. Okay, I'll give them that. Maybe it becomes a free cash flow machine. Fine, but trailing 12 months, $724 million in free cash flow, $138 billion market cap. Again, I've seen much better. I've seen much better. PayPal and SoFi I like a lot. I hold those companies. I hold New Holdings and Robinhood as well. PayPal and Robinhood is still in the short-term position thing. New SoFi Block is in the core portfolio. I've been looking at the local and StoneCo maybe for a short-term trade because they have their earnings, I believe, beginning of March or something like that. But I'm going to talk with Future Investing with Tanner about fintech, maybe at the end of this earnings season. It's going to be a fun one. Would like also, but want a pullback, although I don't think likely. I mean, you want a pullback? You had your pullback not so long ago. The pullback happened. It stayed at $10, under $10 for quite a while. Hey Couch, have you looked at the water sector? I've recently opened a small position in Xylem. Xylem? I'm still holding on my, what is it? 11,000 shares of CAN, hoping for a bubble and FOMO to kick in. The water sector? Yes, I have. No, I have not. The water sector. Let's check it out. In the meantime, let me check out the water sector. But you said XYL. XYL. Let's see who that is. XYL. I'm going to get a description here somewhere. Okay. XYL, together with its subsidiaries, engages in the design, manufacture, and servicing of engineered products and solutions for the water and wastewater applications in the United States, Asia Pacific, and internationally. Water infrastructure, applied water, and measurement and control solutions. Still don't know what they do, but okay. Water. First time someone mentions this company, so I'm a bit interested. The growth rates are okay. EPS is expected to grow faster than sales. Actually, let me show you. Poof. Market cap just under $30 billion right now. Forward PE 30 times, which compared to its 5-year mean, is a bit cheaper on all metrics besides the price to sales, a bit higher, but okay. Interesting. Let's see what we've got. So they increased, this was their latest earnings report, February 6th. Revenue increased 40% year over year. Okay, cool. Gross profit 32%. Net income 42%. EPS 7% year over year. EPS gap 34% year over year. And expected to grow quite fast actually throughout the year. So that's nice. Expected. Same with sales. Okay. As global temperatures rise, water is expected to become increasingly scarce and valuable. Well, it's pretty cold right now. It's pretty cold right now. I've seen enough rain. So yeah, the climate is always changing, and we have technology to solve a lot of those problems. You can take water from the ocean, remove the salt, purify it, and you're good to go. It's crazy what humans can do with technology. Instead of fear-mongering our way into oblivion and throwing tomato sauce on Van Gogh paintings, we can actually do something with technologies to solve our issues. Coinbase to 200 plus soon. Maybe. Depends on Bitcoin's movement, I guess. The next one you mentioned was Canaan, or whatever, whatever it's called. What do they do? So they engages in research, design, and sale of integrated circuit IC, final mining equipment products by integrated IC products for Bitcoin mining. Okay. That's why that name sounded familiar. Huh. This is not happened here. Oh yeah, no, we talked about this once already in a live stream, I think. We talked about this already in the live stream, I think, and I said I don't think we're going to see 36 ever again. And we got a small pump here, basically close to, basically doubling since last week. Huh. Yeah, no. I now that I've seen the crazy graph, it came back. It came back to me. So yeah, we've talked about that, and I talked about other miners, and I said that other miners makes more sense, and I think the other miners made more sense, right? What did Marathon do? Yeah, quite well, right? Quite well. And at least with Marathon, you have not too bad. Not too bad at all. Of course, with Bitcoin as well, price has gone up quite a lot. I'm hoping to cash out some profits out of Can as Bitcoin heads to 100K, heads or does not head to 100K, and to reinvest in the water sector. Okay, a future-proof investment, a waterproof investment, you should have said. Whether or not Bitcoin goes to 100K or not, nobody knows. Nobody knows. I don't know if my Charizard PSA card will be worth $100,000. Depends on if I find someone who wants to pay that amount of money for my card. Same for Bitcoin, by the way. Oh, but there is the Bitcoin halving. Again, doesn't matter. If I'm not willing to find someone who is willing to pay more for my Bitcoin tomorrow than today, the price will not go up. Yeah, but the cost of mining a Bitcoin goes up, and electricity and all of that you have to take into consideration. It's true. It's true. But it would make sense if you actually used Bitcoin for something, which most of us don't. Agitan Gichabas, thoughts on Nanox's crazy rise? Well, thoughts on that, I talked about it yesterday during the Super Investors video. basically because NVIDIA invested in the company. That's it. Nothing has changed. There's an NVIDIA investment, a little pump here in the stock price, and that's it. We've seen the same with SoundHound, right? I've talked about SoundHound at the start of the year, and now SoundHound also got that huge pump because of an investment of NVIDIA. But at least SoundHound has some solid growth prospects in the coming years. So yeah, I mean, before that pump, I talked about it was under $2. So you cut it in half right now, which was, let's say, a market cap of $500 million. You can generate 70 million next year. Not bad, not bad. And then grow 40%, not bad. But again, going up so much just because NVIDIA made us one investment just shows you in what kind of a market environment we're in. My throat is killing me. What did I wanna do? If you got more questions, do not hesitate to let me know down in the comment section below. Just checking here a couple of things. Let's see if we got something interesting on Seeking Alpha. Ooh, talking about Nanox. Apparently, NVIDIA got stake in NanoX through merger, not direct buy. So it got its stake through an investment in Zebra Medical, which was later acquired by NanoX. Okay. I mean, at the end of the day, there's no big difference, right? But okay, interesting. I shorted Snap and Twilio had a great week. Well, yeah. I mean, I don't short, but mentally I've shorted Snap for a couple of years already. And yeah, great success. Should have just sold to Zuck. And enjoyed his life. But no. We all needed another stupid picture sharing app, right? This is ridiculous. Seriously, the dumbest app after maybe TikTok is Snapchat. But yeah, congrats, by the way. Congrats to you. What do we have here? Got some news for something. Nothing that we haven't talked about before. It's a dumb app, but he's still out there marketing. I mean, he has no choice. He's to pay his employees. He's the CEO. It's a publicly traded company. Has really not done much. In the last 5 years, it's up 20%. But yeah, it was $22 back in 2017. Now it's $11.17. Yep. Cool. Or not cool, shall I say. Let's look at the dividend portfolio. Again, with the anticipation of rate cuts, dividend stocks should be more favorable, although every time we hear that inflation might be coming back, CPI, PPI reports are a bit hotter than expected, Job market is pretty strong. I mean, labor market is pretty strong, etc., etc. They can take some hits. Now, unlike the growth stocks on Friday, dividend-paying ones, more solid, stable ones, they were all greenish. This company, man, this thing has gone up and up and up like crazy. Target, green, PM, which is Philip Morris, CVS, Walmart, Realty Income, all green. Which one are red? Nike is red, Apple red, Pepsi. Why was Pepsi? I think there was some news with regards to Pepsi, but I'm not sure. Nike, they reported earnings, right? Not so long ago. Oh no, not yet. Not yet. Interesting. Very, very interesting. Okay. What else do we have? Oh, how did Tesla actually end the day, the week? Flat, just under $200. Was too much to ask. Too much to ask to end at 200, right? But still a nice recovery this week. So yeah, we're happy with that. We're happy with that. Still year to date down close to 20%. NVIDIA is getting boosted by AI sector, probably will become the most capitalized company. I'm personally bullish. I'm keeping an eye on C3 AI and some AI-related cryptocurrencies. Yeah, NVIDIA could become the biggest company on the planet. Could. That means it has to grow faster than the guys, Microsofts, the Apples, and all of these, because they are not standing still. But yeah, could be entering in another cycle. Let's see. C3 AI, probably worthless meme stock. Adobe crashed on OpenAI. Yeah. Let's see what is under 600. Oh yeah. Ooh. 546 points. Ooh, 666. Yeah. Interesting. Soros. Sora. Yeah. It should have been called SOTA, state of the art. But yeah, they're not that smart, I guess. Yeah, maybe it's warranted, even though we've heard that before, right? With Midjourney, with DALL-E, but then in the end of the day, Adobe still generated quite a lot of revenue, quite a lot of profits. So yeah, maybe there are some warranted fears. I'll pull up Adobe here on Koifin, but don't forget, at the end of the day, it's all about distribution. Who has the users? Who can ship products to millions of people just like that? I don't want to follow the news on AI developments and new products each and every week, each and every day. I don't want to go and sign up to multiple, products and whatever. If I am already paying for Adobe Creative Cloud, and Adobe comes out with their own thing, then I'll continue to use Adobe, right? We've seen this with their own image generating Firefly. There was Midjourney, there was this, there was that. Firefly, still a pretty good one. So maybe they'll come out with their own Sora type of thing, maybe. Snap still up. You'll take that compared to Square and PayPal? I doubt it. I highly doubt you take Snap over Square and PayPal, especially business-wise. But yeah, Adobe. Here we are. And they report March 14, so that's going to be interesting. This is Adobe, market cap $247 billion. Right now, after this dip, it became a bit cheaper than its 5-year mean with regards to all these metrics. Could be getting quite interesting if it drops even lower, if earnings are quite good, so the estimates are adapted. Maybe for the long term, it makes sense. But yeah, definitely something to keep an eye on. If we look at the growth expectations, I mean, still expected to grow EPS around 15% year over year for the coming fiscal years. So that's nice. With regards to sales, above 10% growth year over year for the coming fiscal years. Again, a solid compounder. I don't think OpenAI will kill it. Any idea on Adobe growth? I mean, you got it here on the screen right now. You're right, distribution is everything. Yes, distribution is everything. That's what I said also in the Toast video. Toast is focused solely on restaurants. I said Block makes more sense because Block, Square specifically, also focus on restaurants, but at least they have a focus on other things as well. Can you talk about Square Block being used to short micro business? What does that mean? What does that mean? Square being used to short micro business. Please explain so I can understand a bit more. Adobe Analytics will benefit from AI. I mean, AI is nothing new to Adobe. People think that AI is solely something for Microsoft and NVIDIA, stuff like that. Companies like Adobe, if you use Photoshop, if you use all of their other products, they've been using AI for years and years. Just in the last couple of years, we've all got exposed to new fancy schmancy features, right? Oh, look at these cute fake Labradoodles, Labradogs in the snow. Okay, cool pictures, cool prompts, exceptional. I mean, the year-over-year comparison between the videos last year and what we're getting right now, it's pretty crazy. But to say that suddenly it's going to destroy all of these other companies is to say that these other companies have not been working on all of these things, which in my opinion is not true. Ultimately, their customer is small businesses and average earners too. Yes, that is true. But they're also working their way up, as we have seen in the mix of the, what was it? GPV? Maybe let me pull it up. So you're saying, you're basically, if I'm understanding correctly, you're asking me, is it an issue that a lot of restaurants right now, because of high inflation and all of that, are closing? Is it an issue for a company like Square? Is that what you're asking me? The fact that over the long term, if more and more restaurants close down, then they lose customers? Is that the question? Because that's not just an issue for Block, by the way. It's an issue for a lot of companies and the industry as a whole. So here, this one. So Square GPV mixed by seller size. As you can see, the bigger chunk right now is the ones with over $500,000 annualized GPV. So yes, it's true that small to medium-sized businesses is a very important and big market for them. And again, not just for them, for a lot of payment providers as a whole. So yeah, no, it's definitely something to keep an eye on. I mean, if the economy is suddenly going to shut down because of the bad economy, inflation, all of that's shut down a lot of restaurants, a lot of brick and mortar stores, yes, it's definitely an issue because they're losing customers. So yeah, we'll see. I mean, next week is the earnings report. Of course, I'm going to cover that, although maybe not directly, because apparently there are some construction plans at night. Don't ask me. But yeah. Didn't notice the Adobe crash. We'll look into that, as I've been interested for a while, but too expensive. I just talked about that. 5 minutes ago. I don't think it's so expensive. I think you're buying a very solid company. Now that is 7% cheaper than what it was before. We can look at the graph. So yeah, it's getting pretty close to the 200-day moving average at $537. We've been over it for quite a while, pretty comfortably. The last time we're under was back here, May 2023. So yeah, maybe keep an eye out on that if you want an entry, but bear in mind that mid-March, we have an earnings report for Adobe. So going to be interesting. Anyways, if you've got more questions, yeah, I don't know how I missed that. Adobe News. Realty Income just filed a mixed shelf offering. JetBlue appoints Ikan Selin and Miller to its board. What was this whole story with JetBlue that happened? The news comes after reports suggested that activist investor Carl Icahn was nearing a deal to get 2 JetBlue Airways board seats after he disclosed a near 10% stake on Monday. Did we see that? We did. Did we see that? Let me check. Because we talked about... Does anyone see JetBlue here? Or maybe he runs another. Okay, strange. I guess he runs something else because I don't see a 10% stake here. Or maybe it's a new. Yeah, because that's just Q4. Never mind. Skip this. Never mind. Okay. If there's nothing else, I will enjoy my Friday evening. And then maybe we'll do a live stream, a fun gaming live stream or something on Sunday. Tomorrow, as always, the Tesla weekly video. And on Sunday, I'll probably make a comparison video of super microcomputer and the other ones, because I was very surprised to see at how reasonable it still is. Sounds crazy, but we'll see. You'll see in the video. Twilio. Yeah, I talked about Twilio. Before. There's basically not a lot of growth for a so-called growth company. Thanks for joining. Here, Avneet, for the live stream. I hope you all enjoy your weekends. Next week, Next week, we have more earnings. Mercado Libre, we've got Block. What else? Next week. Almost forgot. We've got NVIDIA on Wednesday, Rivian, Etsy, Lucid, Dutch Bros, all of that on Wednesday. Tuesday, we've got Home Depot, Walmart before the market opens, Palo Alto after the market closes, Solar Edge, Realty Income, Teladoc. Probably covered Teladoc for the last time or something. And then maybe Palo Alto. On Wednesday, of course, NVIDIA. And then Thursday, before the market opens, Fiverr, a video will come out. Let's see how they do. And then we've got Block, Mercado Libre, and Nu, and Booking. I'll probably do Block first, even though, again, I don't know if I'll have access to internet when they release earnings. It's a horrible coincidence, but okay. And then probably Mercado Libre will come out probably Friday, and Nu will follow, or you can go and watch Tanner's video, but I'll definitely talk about Nu. And with regards to Nu, actually, someone posted a comparison between Nu and Revolut. If I can find it, it's here. Very good. As you can see, Nubank surges ahead with strong Brazilian market grip and brand outperforming Revolut's global spread. So Nu's market is Brazil, Mexico, and Colombia, Latin America. Revolut presence in over 36 countries globally, of course, a lot of countries in Europe. And as you can see, well, Nu is basically destroying them. Although Revolut, very, very good. I mean, very good app to use. You want to send money to friends, you can invest, although I don't know how safe that is. There are some other stuff, key passes in airport. You can book actually flights and hotels through Revolut. So it can be a one-stop shop. But yeah, it's still private, so I don't know. And I don't know how much it costs them to acquire their customers. I know they have promotions each and every time, stupid notifications. Invite 5 friends, get this and that. Leave me alone. So yeah, Nu is a very, very strong company. Twilio is a clear loser of AI. Not necessarily, because you still need the infrastructure. Can actually help them become a bit more profitable. Anyways, that will be it for me. Hope you all have a wonderful weekend. Saturday, as I said, Tesla weekly video. Sunday, probably a super micro video comparison to other semiconductors, unless I come out with something else. So yeah, and then maybe live stream, gaming live stream, sports live stream, you name it. So have a great weekend. Thank you all for joining, and I'll see you all